Hello guys, glad to have you on board again today. We're already on Wednesday. I mean, days are passing like crazy right now, and I actually kind of just woken up to the fact that we're almost done with the first quarter. The first quarterly expiration is going to come in just a couple of days. Therefore, that means a more longer-term video update is going to have to be released by that time as well. So something is going to be released in this very YouTube channel and probably early April. So lots of things to do. Still, we're Wednesday, which means we do the regular Wednesday stuff. We're going to have a look at flow trading on different time frames and different asset classes, updating these post FOMC world which we're in. Remember that we've mentioned that in the weekly updates. It was probably a pivotal moment in terms of market timings. There are several indicators pointing to that direction, but still, the thing is that we're still going to navigate at sight, because for now there still are no real direction being set by the market. We're still navigating in shadow territory. In areas in which every line that could possibly be there is blurred, to say the least, and there is still no clear path forward. So we're still waiting for this, and that's exactly the conclusion we're going to get down to when we're going to study those flow tradings one more time, because the story is still the same. If we have a look at H1 time frame in here in the S&P 500, which is the reference time frame for flow trading, we still have just as much uncertainty as we had last week. We still can't figure out definitely if there has been two flows to the downside, meaning the first one would be coming to the upside now, or if this was just a big nice first flow in which the third range boundary has been squeezed out, and this one would just be the intermediate consolidation before the bears take over one more time, heading us probably into another consolidated flow to the downside, possibly until the next FOMC meeting, which will be on the first days of May. So still, for me, hard to figure out. I would definitely have arguments supporting both case scenarios, so I would just let the market decide. And the thing is still the same old story. The first element the bulls would have to check on their list if they want to set some scores against the bears, the things would be that we would like the first flow to set itself on the H1 time frame. For this to happen, the bulls just have to keep on going with the prices, don't have to surge. It's just most likely a matter of time. The actual target will be to see that bullish context getting ahead of the rising moving average. The moving average is now flat or slowly raising. The thing is that, well, if we can match it up with the rising context, then that will be the sign that the bulls have scored their first point. That certainly isn't a one battle. Remember that back then, if this happens, then probably consolidation will start. Third range boundary would have to be installed, and I would be ready to buy the moving average after this third range boundary, or worst case scenario, the Bollinger Band at the lower stage. This is really the way it is, all right? So if that's what's to come, then multiple stuff have to happen in a sequence. Like I said, the bulls have to maintain the pressure long enough for the bulls to settle the first point. Then it's going to have to build a third range boundary and going to have to support the moving average, which are lots of things to do in that sequence. So we'll see further down the line. Until then, still the same old story. We are into shaded gray territories in which most of the technicals are pretty blurry. And the thing is that it's probably due to the fact the market itself doesn't really know where to go. It's going to be out of multiple external factor catalysts, like basically macro factors like the unemployment numbers or unemployment credits that are granted each and every week. We're going to get an NFP. There are couples of CPI and PCE that's coming along the way as well. So the thing is that the market may overreact to those things. That's still the sign to me that we're under pressure of heavy, volatile alerts. Though don't try to be too harsh and too aggressive on your both position sizing and stop losses positioning. Well, that's still the same old story out there. Other flow trading have to be updated as well. We trade 4-hour flows, or at least I would like to see 4-hour reversals, though I remember that trading reversal is a more advanced type of trader activity, though I don't want you guys to do it if you're learning the strategy. Flow trading is much more affordable, and in that sense, well, we'll just as well in here, waiting for the first flow to settle itself. Same old story as we just said with the S&P 500. We want to see the context being reversed. First stage have been reached out to. That wasn't the case last week. We've gone from context to context, which is the first kind of good point. That means if the bulls can sustain a higher low point, even though there would be retracement, they will still be able to validate the third range boundary if they break that intermediate high point afterwards. All right, so that would be a delayed third range boundary, which is still good. Best would be to settle the score immediately by reversing the context, settling prices for long to the upside. That doesn't mean surging like crazy, okay? There could be V-bottoms, but they're rare case scenarios. But in here, well, we would just be grinding our way higher as long as possible, reversing this context, neutralizing the moving average, and hopefully getting the support context to match it up. And that would be the same stuff that we've talked about for the S&P 500, all right? That is what I would like to see as a good case scenario to validate the reversals that I'm currently trading on WTI. Until then, this is nothing more than reverse trading, and gosh, please don't do it. All right, so wait for the first flow to settle the score and to settle the direction. If that's the case, well, that means we can safely trade the low risk strategies on the higher time frame. For now and until further notice, this is nothing but speculative trading reserved for more experienced traders who know how to reverse trade. Gold, silver, platinum, metals in general. I will take silver as a reference, same old story. In here, the flow trading are in between H4 timeframes and daily, so be aware that the daily charts might be lagging eventually. The thing is still the same, figure out the areas that matter. Well, like we stated in here, I like when I see V-bottoms, like really bam, one V-shaped reverse. That's generally a sign that the market has built some strong support, and that's exactly the case. Moreover, when we do this out of a preceding technical area, which means to me the third range boundary was at least there, or possibly even as a delayed third range boundary in here, if you accept and say, well, we gone from context to context, even though that's not perfect. Well, the thing is that third range boundaries are there or there, so same old story. When you can't differ from both clearly, well, you can take both as an area. Though consider the third range boundary being this area, all right? Though this flow trading means after the third range boundary, be it there or there, you want to buy the Bollinger Bands, because that is the second flow. So we only buy Bollinger Bands, no moving averages anymore. So all of those areas where you see the technical signals are the areas where I bought, and the areas where probably any buyers would have bought as well. So the thing is that going right back to the previous level in here and V-shaping out of this area, to me, is the sign that, well, we might have lost a bit of control in here as bulls, meaning the bears have managed to settle some scores, but still in the end, we're the strongest ones in this battle. So until further notice, I'm just bullish on metals. I see absolutely no reasons to go the other way around. We've gone from context to context on the lower time frame, which means this V-shape is now validated. We are reversing the context, and I see absolutely no reason why this thing would unwind. So I see all but reasons to go higher, and until then, I am just following through with the current trades, which means I have risen my stop losses. All of the trades that I had back then are now set at break even, and I'm really going to wait until we go higher so that I can do the same for these trades as well. And once I'll be able to do it, I'll have even more cash available to break out trade eventually. Until then, of course, all that I care of is the next area, the big third range boundary area, which I would like to see traded, eventually retraced if necessary, but then broken, and that will be the trigger sign of my second flow. That means at that stage, I will be stopped at break even, and I'll be just piling some nice gains. All right, so that's really the way it is. Speculative trading is nothing but having some recurring set of stuff that you replicate over and over again. Don't change the rules. Don't try to bend them. If for whatever reason the rules you have just can't settle the score and differentiate between bulls and bear scenarios, well, just accept both in the meantime. All right, that's really the way it is. That's generally the sign that uncertainty is settled on the high time frame. In here, it's not the case. As you can see, silver seems pretty clear to me. There are no worrisome signals. So right now, I would just be letting that trade behave. It's on a daily time frame, so of course, even though flow trading is one way to trade on shorter time frames, you just can't set the time frame in which the market can be traded. In here, it's the daily chart, and if you want to do anything on lower time frames, well, good luck with that, because that's nothing but chaos to me. All right. Lower risk timeframes are on much higher scales, so that's really the way it is, all right? Don't try to impose the timing you want on a market in which you have absolutely no control over, all right? It's really, really the other way around. The market sets the timing and you adapt to it, certainly not the other way around. When it comes to cryptocurrencies, same old story out there. There are so many signals, and we've stated it back then. Same old story in here. Bam, bam, big V-shaped reverse. We're immediately going to fuck the bears in these situations. And what I said back then is that I still couldn't figure out which time frame was the appropriate one to trade on. I clearly I've seen that the H1 time frame was much more aggressive. I mean, we've seen those contexts being absolutely excessive and stuff like that. That was the sign to me that the time frames at play were possibly 4-hour or somewhere in between, because we stated 4-hour chart might be too slow, meaning that the trend channels and the context are not moving fast enough. But the thing is that in the H1 time frame, they're moving too fast. So kind of the area of pure technicity would be sitting in between. But the thing is that you have a framework, all right? You need to settle down with my strategy and figure out that framework by choosing a time scale grid. The thing is that, well, you could take the other time scale grid, which is 30 minutes, 2 hours, and so on. But the thing is that once you picked and choose one grid, you don't change, which means even if in here I would definitely agree with you saying eventually 2-hour chart would seem more appropriate in terms of channel building, but the reason is you've picked the 1-hour and 4-hour grid. Jesus, don't go in between, and just understand that yes, H1 timeframe signals might be very sensitive, and therefore don't try to be too sensitive to this. Understand that some false signal might be triggered on the H1 time frame, and that the 4-hour chart time frame instead could be delayed. And if you combine these two information, you got it all. That explains why it was so freakingly aggressive, why so many third range boundaries have been squeezed on the H1 time frame, where on the other hand, the 4-hour chart hasn't reversed the context, but has rebounced on the moving average, and with a very nice V shape. So we're kind of rushing the 4-hour time frame and fucking every bear signal on the H1. Though yes, the technical signal tends to confirm that previous assumption. The appropriate time frame is we're too laggy on 4-hour and way too aggressive in H1. So don't take anything but that lesson. That lesson tells you that, well, if you try to lock on your games too quickly on the H1 time frame, you might just get out of the game too soon. It's really the #1 biases for beginners, the kind of I'm stopping too soon, like I'm taking my profits too early and I'm letting it go endlessly for my losses. Don't ever do this, all right? So right now you know one thing. There could be H1 signals that will eventually be broken, like third range boundaries that get fucked right after. So get ready to be eventually partial profit taking on H1 signal, but certainly not taking it all off just because for whatever reason you fear like it's going to V reverse, you're going to lose all your gains because, well, you've been so harmed by the bear market that has been absolutely outrageously violent. Well, don't take the lessons from the past, all right? The thing is that really in here, the past price action that has been extremely violent certainly doesn't mean anything to what's coming next. And don't be among those who fear of losing their nice earned gains. You've taken some risks, they have validated, and everything suggests there is no such a thing as rushing your way out. You can partial profit take, but don't do the mistake of taking it all out because you fear of the market just reversing violently. Everything kinds of proves the opposite right now. So just try to put it simply. If you're waiting for a 4-hour third range boundary, it might not necessarily be the case because you know 4-hour charts will be kind of delayed. The signal will come right after, all right? So I would say until then, try to trade safely. Don't forget to eventually partial profit take when H1 signals tend to show some third range boundary signal. And as you can see in here, it's not the case. For now, the context are still rising in the H1 time frame. So if we get a reversal of the H1 time frame context, To me, that could be the sign that, yeah, you could start to think about a first profit taking, but to me, it would be required to be a partial profit taking, somewhere like 33% to 50%, depends on your own risk assessments. But the thing is that if you go all the way down to taking it all off the table because you got the H1 signal, even though everything suggests that in the past the H1 time frame was way too aggressive, and it very likely will still be, then you're probably going to limit your gains. All right, so partial profit takings on H1 signals, I definitely will say this is okay. Taking it all out because you fear of the market erasing all those gains, to me, is an absolutely stupid decision. I know you're going to think about it because, well, I've been there before. I had those feelings. I had those biases, just like every trader around there. So I've grown myself out of this, and I hope you will as well. Anyway, that was enough for today's things. Other stuff that I'd like to say, remember that you need to stick to the essentials, all right? Don't overexpose yourself to the market by trying to buy each and every altcoin out there. The quality ones are probably the only ones that will survive after this bear market, and there is no room for everyone to grow. So there is a limited set of good assets who can take on capital, but don't think everything will go up. Have a selected set of assets. You know mine, Ethereum, Atoms, Bitcoin, and so on. I will release later today the analysis on Ethereum, Bitcoin that I promised on the latest weekly update, but just couldn't find the time within the 20-minute limit. So I'll try to release that one this afternoon if I can find the time to record it. This will be a fully extended version of explaining why I do make such arbitrage between Ethereum and Bitcoin, my personal portfolio. I'll try to explain everything in greater detail so that you guys know where to stand on. And on the other hand, yeah, oh great news. I wanted to settle down for a long time on this, but oh boy, we finally have a Cosmos validator. Pro indicators I settled to get in here, though I couldn't settle for pro validators, which I wish I could have, but the thing is that there's always problems in life, and that time around when there's already a validator who's been taking that name. So we've settled for pro delegators, which seems like a good compromise. Anyway, you got the logo. So this is our official validator. I wanted to state it very clearly. So the thing is that it's already in the active sets. It hasn't been an easy task to get there. So if you want to redelegate or simply delegate some of your tokens, it will be very appreciated. You're not going to lose anything in here because we're already in the active set, so the rewards still compound. We're going to eventually release a video on that specific topic, trying to explain you the vision of that validator, what we want to do with the rewards we take and the fees we take, explaining everything. So once again, TLDR, we're not doing this for profit. We're actually going to build some software that we're all going to benefit from. The thing is that, well, I'll probably release a separate video on that. Until then, well, thanks to those who already delegated blindly. Thanks to those who will do it afterwards. And yeah, that's a nice journey, which I wanted to be part of for a long time. I mean, it's no wonder that I really like the Cosmos ecosystem. And I wanted to be more part of it. And this is the step forward. Big changes for me ahead. It's a new journey, which has just started. God knows where it's going to go. Hopefully as far as possible. So yeah, I wanted to thank you guys for the support. Bye-bye.